Good morning, everyone. My name is Anne-Marie Band. Today is Monday, January the 9th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're looking at the futures this morning. We'll go through everything, but we're starting with the futures. I want to remind you a little bit about what things look like overall. We've had a real run out of this area. So some folks are saying, hey, listen, this is a big breakout zone. We really are going to lift. Things are looking great. The Fed's going to pivot because of the ISM numbers. The market did not respond to good news being good news from the jobs report because that was really bad news. 200,000 of those jobs were actually only part-time, and the actual labor participation rate reversed. So digging into the jobs numbers, they looked really, really awful. But at first pass, it looked great, and then the ISM numbers dropped in 49.50. They expected something in the mid 50s, and so this was very nasty fade, which in turn, bad news is good news in the market. It says, hey, the Fed's going to pivot. Now, all of 2022, all the traders did was bet against the Fed, and they're doing the same thing right now. We just can't fight that Fed, but what we can do is make sure we understand how traders are thinking so that we respond to what the traders are doing, not what legitimately makes the most sense. Because a lot of times traders don't make a lot of sense because they're buying the rumor versus selling the news. Okay, today, 12:30, Bostic speaks, 3 p.m. We've got consumer credit. They're going to move on Bostic a little. I put an alert there to watch, but here's what we've got. I have the 4-hour chart on this side. I don't normally use that number, but I do want to show you that let's go to the weekly first. What you can't see from a weekly perspective is that the price action right around here is really important. So what are we looking at? This, folks, is volume by price. This is our VPOC, I believe. Let me double check. Yes, that's the point of control. I really don't like that color. Actually, I don't like that one either. It's got to be yellow, so it matches everything else. All right. And so we can see it's stalling out right around this 39, 34 area. Here's the thing. It already faded once off of, it's faded several times. It's a 15-minute chart. It's bounced, pulled back to the 39.26 area. We know that area pretty well, but look what's happening. Low, high, higher low, higher high. They are going to try and grind this up, right? They are. They're going to try and grind it up. We'll be able to see from the technicals where that's sitting, and then we'll be watching the opening tick and those sorts of ranges to figure out what we do next. In the meantime, here's what we look at. This trade on December the 16th is the high that they're going into. They backed off. The breach over there is going to push us into 39.50 to 39.65. That's where I think the next target zone actually is. And so if we get a nice pullback, anything that comes into the 50% range or the prior high of the prior day, which was 39.13. No, what is this one? High 39.28. Well, we did that pre-market just a bit. You can see that 28 holding. Things are going to move to the upside. This is my thought. On Friday I said, hey, listen, I think we go sideways, and we absolutely just rocketed past these, and we just continue to hold. My suspicion is that it was short covering into the number, but the ISM coming in after the fact really did give the chart a little bit of a nudge in the upward direction because the traders are thinking the worse the market looks, the more trapped the Fed is going to be. And so as we take a look at, this is the volume by price ticker, here we see our volume point of control. We're rising above those zones. We're still caught in a fairly sideways action event here, but notice the grind. Low, high, higher low, a retest of that high, higher low again, and then a higher high. And so my suspicion is that they're going to continue to try to buy this up. The one problem with the Qs, folks, is that it is a much weaker market than the others. And so it's sitting right against last week's high. That's what this number is, right? Last week's high, they're going to want to try and get over that, but so far they can't. I suspect they will, because they're going to press with the rest of the market and get a little bit of relief. I've got some Fibonacci's up here to watch, right, in this 325 to 363 area. All right, let's take a look at SPY. All right, taking a peek at SPY, this is the prior month. This is the prior week. We're starting here in the pre-market, of course, gapping up, but notice this prior high from last week. We're trying to break out above it. Let's see what the live reading is. Bonehead Fred here. The live reading is 389.80. Yeah. Okay, so it's coming into this edge and then backing off. But again, notice low, high, higher low, higher high, very shallow dips. So we're going to expect the traders to bounce at that 388, which they did. And now they're trying to get up over this edge. Want to watch that. If they breach over that 389, they're going to try and run into this 392. That's going to be the next area in the formation. For the Qs, what we see is the same sort of relative weakness that tech has got right now. A lot of people are betting on the fact that tech is going to be the one that rallies, but that's only going to work if new leadership takes over in the short term, and I just don't see that at this juncture, right? There's still a lot of flow in the FANG stocks, and so we've really got to watch out for that. Notice the wicks here and the tiny bodies from open to close in the last couple of weeks. This next week here, this last week here is going to be really, really important. We get up over 270, it's going to be long. Just follow the trend today until it exhausts, and it will exhaust. All right, take care, good luck trading, and I'll see you all tomorrow.